everybody, we are back. Welcome back to the Pesce Lanzillotta Team Podcast. We've got Eric Braun here today. He is a contour mortgage loan originator. He is killing it. He's killing it on Instagram. He's marketing himself. He's young. He's 24 years old. He is selling a ton of loans, and I want to know how this guy's doing it. I want to know why he got in the business. And I want to know what he thinks with regards to where we've been and where we're going. So welcome to the show, Eric. How are you?
I'm doing good. First off, thank you guys for the opportunity. I love what you guys are doing here. I think you're bringing tremendous value to your listeners and the industry at large. So I really appreciate the opportunity for bringing me on.
So listen, I want to kick this thing off because you're a young guy, right? And we're talking about people that are making some pretty big decisions, right? I mean, for most people, I would say that buying a house is easily they're looking off a cliff and they got to jump, right? I mean, I know a lot of people that they look at that $500,000 house, 600, 700 million, and they say to themselves, oh my God, I'm about to take a huge leap in life and take on a big responsibility.
Absolutely.
So here comes this 24-year-old, right? Young guy. Tell me how you got in the business. Tell me how you're overcoming that. Tell me how you're working with that. Because to me, it's got to be a confidence thing. And you've clearly got that. So walk me through how you got in this business and what it's been like since you got in.
Let's unpack that a little bit. First off, I fell into the industry. I actually ran into an individual. It's almost like a Wolf of Wall Street kind of story where I ran into an individual. We both bonded over the fact that we liked German cars. And he had a nice one. I didn't, right? And in my mind, as an 18-year-old kid, if you drove an Audi, that means you're making tons of money, right? So I kind of followed this guy. And over the 2 years of knowing him, he asked me one day, what am I doing for work? And at the time, I was not doing anything. I was unemployed. And I said, nothing. And he said, how about, I know you like Audis and I know you like, cars and all that. I'm going to buy a new car. Why don't you come be my chauffeur? I said, absolutely. That was like a dream job to me at the time. I'm unemployed. I'm 20 years old. I get to drive around in a really nice car all day. Sign me up. Right. And little did I know he was just joking around. So after 2 weeks of talking to me every single day saying, hey, when you going to come be my chauffeur, he finally said, all right, I'm just kidding. Come to my office. I have a real job for you. Mm-hmm. And I didn't even know I was showing up for an interview. I showed up, looking like this. I had a T-shirt on and I had no idea what I was walking into. And I walked into like a really serious office and he sat me down, put an employment package in front of me and he said, sign here. And that's what I did. I didn't ask him how much I was getting paid, what I was going to be doing. But in 2 weeks after the background check came back, and it came back clean, thank God. I was thrown on the phone and I started as a telemarketer in the refi boom a few years ago, about 4 years ago now. And then my business took off from there, so that's how I got into the industry. Right. Now being young in the industry, I believe it's only an obstacle if you look at it as an obstacle. Like I sit down with families all the time. A lot of them are twice my age. And I'm going to say 9 times out of 10, they never ask me how old I am because I portray that confidence and I am seasoned. When you're going 4 years straight, not 4 years straight, but for the past 2 years, you're helping 4, 5, 6, 7, 8 families per month. You're a seasoned professional at that point. And when I do talk mortgages, suddenly my age doesn't become a factor in anything, right. But that's really my story on how I got in the industry. And it's kind of funny how it all worked out. Thank God for that individual who brought me in though.
Cool.
So I was going to say, I mean, so you walk into this office and you sign these papers and you get on the phone, you start calling. I mean, you have to have had some sort of, interest in it, right? Was it just because you kind of wanted to get the car, or did you actually kind of like what you were doing?
It was a mixture of wanting to make more of myself and not having any other options. At that point in my life, I did not have any other options. I mean, my other options were go get, a dead end job and make an hourly wage. And I really, from the beginning, had no interest of doing that. So this opportunity kind of opened my eyes, not only to mortgages and real estate, but just the endless possibilities of life in general, financially speaking, and also when it comes to like a mindset and working with other individuals, impressive individuals. Yeah.
So what was the progression from telemarketer during the refi boom to where you're at now? Take us through that process.
Absolutely. So this is kind of where it gets interesting. So I don't want to ever paint the picture where I got started in the industry and I started killing it and I loved it, right? Because that's far from the truth, right? I did pretty well for my first year, but I definitely didn't like what I was doing. And apart that, on top of a lot of other things going on in my life at that time, I was at what I like to call a jumping off point, where I had to make a decision to do things differently, right? And this is in the middle of my career, or in the first few years of my career. So first year and a half, 2 years. And I was living a life that I didn't want to live. I felt like I was at a dead end job. I felt like, lost. And my life didn't have any meaning or purpose at that point. And I took a step back and I, through a lot of soul searching, I figured out that I don't have to live a life that I don't want to live. Right. And that's where that whole defeat average movement in my brand really started from, is from serious emotional and spiritual pain. And out of that came my brand. And I said, well, I'm not only going to, change my life and defeat average in my personal life, but I'm also going to defeat average in the real estate industry as a whole. And that's where it took off. That's when I decided to get my license. And I started to transform from refi into purchase. Now my business is, 20% refi, 80% purchase.
So is that the goal of lenders, is to do more purchases than refis, or does it not even matter?
I think it depends on the market.
Right.
It depends on the market, because while during those first, that second year, rates were going up. So the refi business started to, dry up, if you will. And a lot of places actually shut down because of that, because they were so heavily focused on refinances. And a lot of loan officers got their, it was harder to make money because now rates are going up, less people are refining. There's always going to be people refining no matter what the market is, because people want to take cash out, et cetera, buy a new home, all that fun stuff. But I think in this day and age, you have to know how to get purchase business. And that's harder. I think it's harder to build a purchase pipeline because you have to go out there, market yourself. It's not as easy buying leads and calling, know.
If I was to put myself in your shoes, I would think my biggest customer would probably be realtors. No, I mean, you want to find teams and individuals who are doing a lot of transactions every year. Yep. Maybe get a few deals from 10 different people, and you got a living.
Absolutely.
Kind of walk me through what your prospecting process looks like, and how you go about finding where you're going to pull business from and who you're going to talk to do that and all that good stuff.
Right. Sorry about that. So there's a bunch of different ways to build your business, number one. And there's not any right way. Just like as a realtor, you can focus on investors. And I want to list all these, this builder's homes. Or you can focus on first-time home buyers, maybe have events and, constantly be prospecting for buyers. Or you can call FSBOs and door knock, and I think every realtor has a healthy mixture of both, of all, and same thing goes with the loan officer. So I would say my main majority of my business, actually 100% of my business, is all referral, whether that be from past clients or from other real estate professionals, whether that be financial advisors, accountants, builders, or realtors, mostly realtors, because there's a lot of you guys. Now, my whole thing is, all right, how do I separate myself from every single loan officer calling you on a Monday, right? Asking for business. How do I separate myself from just another nagging loan officer calling or hitting up a realtor asking for business? That's where not only did my career take off, but my whole life changed at that point when I really dialed in on this. And that's what I call, after contemplating and trying to figure out how to separate myself, I call it my partner approach. So not only am I going to give your clients outstanding service, aside from keeping you in communication throughout the whole entire process, because I know one thing loan officers are known for is not picking up the phone. That's not at all how I build my business. Aside from closing, difficult loans and maybe the non-QM products and all that fancy stuff, the bells and whistles. Aside from all that stuff, I want to focus on adding value to the people I do business with. And that's when my whole business took off. And there's a bunch of different ways I do that. And I can honestly say that the, let's say, top 5 realtors that I work with will tell you that I've positively impacted their career and helped them close more transactions in a numerous amounts of ways. So that's what I focus on. And then all of a sudden, when I focused on that, the business started, really, really coming and kind of, flooded the pipeline, if you will.
Right. So I would say the most important thing as a realtor is you just don't want a deal to blow up.
100%.
You don't want any surprises. You want the file to go through the underwriting process without a hiccup,
right?
And you want to get to that closing table and know that you're going to collect a paycheck that day. So, tell me about a time. It probably happened early on in your career. It had to have happened when a deal blew up.
Well, I will say this as a preface. Hold on, I think I lost you on the audio.
You there?
Okay, there you go. Okay.
Yeah.
I will say this. I've never submitted a deal to underwriting that didn't close. So that's first and foremost.
Never had a hiccup in the middle of a deal.
That's not true.
There you go.
Now, so there's been a bunch of times, clients all of a sudden get a new car during the transaction. Clients lose their job, unfortunately, during the transaction. Clients deposit that money when you told them you can't use that money. I've had clients go late on all their credit cards, and now we have a 550 score and we were planning to go conventional. So that's an issue. How do we fix that? And I think before I even get into like an exact scenario, if a deal is having income problems or, there's underwriting issues 2-3 weeks in, that means somebody didn't do their job. Very simply. That means somebody dropped the ball. I'm a big support. I'm a big, and this isn't to give me all the credit. When I say I've never submitted a deal into underwriting that didn't close, I'm going to say mainly because of the team I'm with. We have a system where we're not working on dead deals. Right. And we pride ourselves on that. And now after doing volume for a certain amount of years, you get to the point where you know what the underwriter likes and you know what they don't like. You know what they're going to ask for if the scenario is this, because you've already ran into that scenario. Now, don't get me wrong, you're running into new scenarios every single day, but once you get the general idea of things, you should be able to underwrite a file before it goes into underwriting, right? So that all aside, to give you, a story, deal goes into contract. It's a husband and wife. Wife gets diagnosed with breast cancer.
Oof.
I'm going to say a week into the deal being into contract.
Mm-hmm.
So that we got that going on, right? And I'm constantly talking to the husband, and I don't even want to talk about the mortgage at this point because it's like, what's really important here, right?
Right.
Now, wife also goes late on her credit cards, right? She didn't have good credit to begin with. We're talking about a low 600 score. Now we're in the 500s. We can't use her, period. So now we can't use her because of her credit score, and we have to remove all of her income from the deal, which now there's a debt-to-income ratio problem, right? Now this individual, the husband, can't qualify on this loan without his wife. Luckily, if not really luckily, because we knew this was always like a backup plan, his second job was about to hit 2 years. The guideline is you can't use 2 jobs unless that borrower has a history of working not those 2 jobs, but 2 jobs in general for 2 years. Reason being is because banks don't want you to be able to go pick up a side job just so you qualify for a loan, right? So you need to have a history of working 2 jobs in order to use both of them as income.
Mm-hmm.
Most of the time we just use one because we only need one. But anyway, in this case, we needed both now because we have the wife off the deal. So our options are the deal can close because he's going to be 2 years at his second job in 2 months. So we got to drag this out. Of course, I'm letting the listing agent know. I'm letting the realtor know. I'm letting him know. Everybody knows what's going on because at this point, we got to deal with it. There's no point of hiding, which a lot of loan officers like to hide problems and they don't pick up the phone, et cetera. That's a whole nother story.
Mm-hmm.
So now I'm being very vocal about what's going on. And the other plan C, I guess you can say, so that's plan B. Plan C is child support. He's paying child support to his last wife. And that's going to come off, or he's not going to have to pay child support anymore in 2 weeks. So he's going to court in 2 weeks, and he has to provide that paperwork to us to show us that he's not liable for it anymore.
Mm-hmm.
Luckily, he was able to get that paperwork because I don't want to rely on the court to close my loan because God knows, what happens in family court, right?
Tangled web.
Yes.
Right.
Yes.
And in this process where you're describing right now, for anyone who's listening, this is what separates the men from the boys in this industry because life
Absolutely.
gets in the way. And when life gets in the way, this is why people like Eric are extremely important in being involved in these deals. And you have to have someone with the same fortitude as Eric. But continue, because this is
I'll wrap it up yeah. So we got the document saying he does not need to pay child support anymore. So now we don't need to wait 2 months for that employment history for the second job. And we were able to close with just him on the loan, just one job without the child support. And that took, I'm going to say 36 days, if I remember correctly. Wow. So even the difficult file, this is another thing that I always like to say, even the difficult files shouldn't take longer because you should already have a plan B and a plan C. Right. If going into it, this income is a little sketchy. He didn't make as much in last year. What if they average? If an underwriter averages a deal and last year was very, very light, that could kill a deal. Now you have income problems 3 weeks into contract.
Right.
So how do we overcome that? Do we prep? And it's all about prepping the client, right? So even if it's a tough deal, what I like to pride myself on is the client knows how tough it is, number one, and they know exactly what we need to do in order to get this done. Now, could you imagine that same situation that I was just running through, and let's say a company called Torpedo Mortgage was working on this file? It would be an absolute, that's a dead deal. So the realtors are losing out time, money, everything. The seller is not getting a check. The buyer isn't getting their house. And that's really, like you said, and I appreciate you saying that because a lot of people don't get it, what separates the men between the boys and the importance of having a seasoned loan officer on your transaction.
Mm-hmm.
So yeah, that's one of my stories of, as you know,
So
along.
when you're sitting, because you said you're 100% referral. So
Yes.
when people refer a buyer to you, whether they, I don't know what your business is, if it's 70% first time home buyer or if it's, kind of mixed up 50-50, what's for the people who are, let's say, first time home buyers, because right now, as you know, mortgage rates are really low. A lot of people are buying houses.
Well, sorry to interrupt. What is the current mortgage rate? Like a 30-year fixed rate for someone with good credit, average home buyer?
For compliance purposes, since I can't throw up any disclaimers right here, I don't want to get hit with a fine. You're looking at a range from anywhere from low 3s to high 4s, right? It depends on so many different things, but historically speaking, we're at a low point. We're definitely at a low point.
So
good question.
So what do you say to those people? Because they're coming in, like how do you guide them to, if they are a first time home buyer?
Yeah.
What's the process you take them through so that they know that, they're going to close on the house and they're not going to have an issue with it? Like, what do you take them through with that?
So first and foremost, I call it like an initial consult, right? Where we get on the phone and I take them through, number one, the application, how long they've been working at their employer, where's the money coming from, a lot of the important questions, because a lot of times one of those questions, if you miss it, then you have issues, right? You didn't ask them what they made last year, and now you submit a file, the deal's in contract, you got a big issue. So it's a big responsibility to take a thorough application. Aside from that, which should be standard, but it's really not.
Well, so
I like to –
sorry to interrupt again.
Go ahead.
For people who don't know, what are the major things, if someone's going to buy a home and they want to talk to a mortgage broker, I mean, what are the major questions that they should expect? And if they don't get, should raise a red flag in terms of, what this person's asking for?
There's so many. The quick answer would be income, credit, assets, right? That's the three things that are always underwritten during a mortgage, to keep it super simple. We fill out something, every bank fills out something called the 1003 or a Uniform Residential Loan Application, IRLA it's called, all right? That document is, I'm talking pages of extremely fine. So there's so much information that's packed into that. But I'd say definitely employment history. That's a biggie that crushes a lot of deals. Credit history, because sometimes it's the guy has excellent credit, but he had a foreclosure, 2 years ago. And that's there's seasoning requirements for certain types of loans for the time period after a foreclosure or a bankruptcy, something that might not show up on credit, but normally does. So asking those questions, hey, has anything happened in your life? Where do you live now, right? Where do you work? Because if you're buying a house in Jersey, but you work in Suffolk, is underwriting going to believe that that's your primary residence and you can be able to take advantage of a low down payment, right? So stuff and it all comes down to experience and knowing how to underwrite a file before it goes into underwriting, right?
The bottom line being, if someone's talking to a mortgage broker or a loan officer, they want to make sure that person's asking them detailed questions. Because if not, underwriting is going to ask the detailed questions, and they're exposing themselves to potential problems in the future.
Exactly. Because and for the people who aren't listening, what's an underwriter? What's underwriting? Like, what does that exactly mean? The underwriter is the person who's actually signing off on that loan. Yeah. And what a lot of loan officers do, and I don't want to bad talk anybody, but unfortunately we kind of have to, because this is what's going on. And what a lot of companies do is they make it sound so easy to get a mortgage, but it's not. It's easy for some people if it's spotless. If a deal is spotless, then it should go super easy. Unfortunately, the marketing mantra that's being thrown out into the marketplace right now is, come to us, we can do your loan extremely easy, right? And now what happens is you're setting the buyer's expectation incorrectly, especially if that person has a difficult situation. Not to go into another story, but I had somebody pre-approved at, let's say, Torpedo Mortgage again. The buyer's agent they were working with told them time and time again, listen, I've had extremely bad experiences with this company. You need to speak with Eric. I spoke with them, went through the whole spiel. They were offered an insanely low interest rate from that company, right? And I told them, I'm here. I'm probably an eighth of a point higher, but you got to be careful because I don't know what's going to happen. And your situation sounds a little difficult. Long story short, they went ghost on me, still worked with the realtor, and I'm not going to chase that deal and blow out the relationship and ruin it for that agent. So I'm hands off at this point. Goes into contract on a house, calls me a few days into contract and their first question was, what's the lowest credit score can you do? And I said, whoa, this is a bad question to ask at this point. And they said, my loan was denied. I'm in contract right now. Can you help me? And because the marketing mantra of that company is come to us, we can do everything online and it'll be super easy. They were fooled. And now they were offered an extremely low interest rate, which is great, but the company can't do the loan. So what does that rate even matter at that point? Right. Yeah. So that's just an example of what can happen. And back to you, Paul, like you were talking about first-time home buyers, there's so much misinformation out there. And I'd say one of the biggest disservices my industry does for the industry at whole is make it sound so easy, because it's not.
Yeah. It's definitely.
So what you're saying is it's a marketing ploy.
Yes.
These mortgage companies to turn around and say, we'll get you the loan.
Yep.
And lo and behold, they take you halfway down the road in this process, and then they go, oh, well, maybe we can't do this. And now you've made commitments and you're in a very bad way. There was a time, Wexford, we sold a house and we actually got to the point where they were going to sign contracts. The pre-approval that we took to our sellers turned out to be a completely fake document. Completely fake. And the house was, say, a $500,000 house. The guy put $250,000 down on contract.
Right.
So he was with some fake mortgage company or whatever it was that overpromised something, underdelivered, whatever the case was, couldn't get the loan. He had $250,000 on the line. So I hear what you're saying. It's very true. So,
well, what people have to understand is just think about it logically. On Long Island, houses are expensive. A bank is not going to give you hundreds of thousands of dollars, literally, without doing their due diligence. They're gonna look at things in a very detailed manner, right? So if you think that, first of all, you have to understand a pre-qualification, a pre-approval is not a license that you're going to get a mortgage. And then if you think that you can hand over a few documents quickly and easily, and boom, you're going to get that mortgage. I mean, that's crazy. The bank is gonna, at some point during the process of underwriting, right? But just thinking about it logically, at some point is going to do a very detailed and thorough inspection of who they're lending this money to,
right?
So they can afford it. So it's a point I want to stress, in that when you're going to buy a home, a pre-qualification and a pre-approval is not a license to get a mortgage, but also the person that says, oh, just get me a couple documents and I'll get you the pre-approval. That right there is a red flag. The person that says, come in, let's sit down in person, let's have a conversation. I'm going to collect a lot of documents here. I'm going to ask you a lot of questions. Well, that might be a little more of a pain initially. The person that does that is the person that is the actual professional, and you want to trust that you're going to be in good hands throughout the process. Because to Ron's point also, once you sign the contract and you put that money down, while they're all, well, if you have a good attorney, which you should have a good real estate attorney, there's all sorts of clauses that can protect you.
Right.
You're also becoming liable a lot of times for that purchase and the money you put down.
Well, what if they made it non-contingent on the mortgage?
Exactly.
Exactly.
Because we're in such a competitive type market.
Yep.
That's something that a lot of people definitely consider.
All the time, especially now when you're getting multiple offers on a house. I mean, who's going to give me the best deal? For my client, right? When somebody says, "Listen, it's not contingent on the mortgage," that's almost a done deal, pretty much. I mean, because there's no way you can mess that up. You either have the money or you don't have the money.
Right.
But to circle back, so you brought up in the beginning, like, what separates yourself from what people don't know. You say not your average lender. right?
Okay.
So that's kind of been your brand name, I guess you can say, right?
Mhm.
So you're big on Instagram, and social media. So when did you start with that? How did you get into it? Why did you do it?
How'd you
And
grow it?
how did you
interested in
grow
that.
it?
Yeah. So I started let's call it like my personal branding, probably, if I've been in a concert, I'm going to say 2 years ago. And that's when I like really stayed, and I'm talking about consistent 2 years of hammering this thing home. And the reason I got started is, again, like I'm always asking myself as an entrepreneur, right? Even though I'm not, technically speaking, I'm a W-2 employee, right? I'm an employee of a bank. You guys, realtors, you're really entrepreneurs. You're self-employed. You may hang your license at a brokerage, but you pay yourself, right? I like to think of myself as an entrepreneur because at the end of the day, I eat what I kill. I'm no different than you guys as far as commission works out and stuff like that. I mean, besides, you guys make a lot more money per deal, but that's a whole nother story.
It wasn't always like that. It wasn't always like that. So quick little rerun. When I was in high school, we used to telemarket for Southern Star Mortgage.
Oh yeah,
Which
yeah,
I think got closed down. I'm not sure.
yeah, yes.
I was 16 years old. We used to go there after high school with a bunch of buddies. Okay, they used to sit us down at the table, and then they would have these. They put us on dialers, and they would have these names pop up with these numbers next to them. So the number would be like, let's say $30,000, and they would tell us your sales pitch is, Mr. So and so, you have $30,000 in revolving debt on your credit report that you can consolidate into your mortgage for 4%. You're paying 18 to 22% on your credit cards. And these people were full, and then they would fall for it, hook, line, and sinker. We would send them to the mortgage guys. But those guys, they were charging points on the front, points on the back.
Yep.
All kinds of fees for applications, and they'd walk away with like $30,000 on a $300,000 mortgage.
Yep.
That's why we've obviously had some reform, but the point being, it wasn't always like that.
No, and right, we've had reform, rightfully so. So I only hear stories about those days. I don't know about it firsthand, but I have heard stories, and it was the wild, wild west. It was the wild, wild west. Anyway, so as an entrepreneur, for lack of a better word, I always need to ask myself, how am I going to separate myself in this crowded space as a realtor, when there's thousands of realtors just like me, same license, same certification? How do I separate myself from the pack? And I said, social media, right? If I want to serve and help the most people, I have to be where the most people are. 90% of the time, we're on the internet, we're on social media. It has become the internet. Yeah. It is the internet, right? Facebook is Google, and Instagram is Google Images. Mm-hmm. So I need to be where the population is, where my target audience is, which is, potential home buyers, people who are looking to refi, and then also other real estate professionals to hopefully build a relationship with that person so that they can send me their customers, right? And if I really, and I thought about it, I had like a eureka moment. If I really take the time and invest my time, energy, and money into social media, I will be the biggest loan officer in the country. And that is my goal to do so, is to be the top lender in the country one day. So that's like the mindset behind it, and why I started, and the journey of doing it. To hit on that a little bit, I feel like there's certain breakthroughs, just like anything we try and learn in life, right? Let's take the gym for example. Like, at one point did I learn it's not only about working out, it's also about diet. Yeah. You know what I'm saying? And that's, I've had multiple experiences like that over the 2.5 years I've been building my brand, if you will, through social media, where it's like, I realized, all right, pictures and content like this work better than pictures and content like this. And let me double down on this. And, you know, who cares if my hair is all messed up? Post a picture, you know, only we're thinking about that. And there was like little breakthroughs along the way. And it's also, I think, very important to follow people who are doing what you want to do at a higher level. So
how do you, as a loan originator, right?
Mhm.
I mean, a realtor, I get it. You know, we're in and out of some gorgeous homes. There's a lot of content there.
Mhm.
Instagram's a very visual. It's a very visual platform with all these photos and videos and stuff like that. How did you go about saying to yourself, okay, I'm going to create this content on this platform that's interesting and engaging, yet it's not like you have these visual props like we do to help grow those platforms?
So there's a few things. First, the focus on the brand or the personal brand before anything else, right? It's not about mortgages. It's not about real estate. It's about me, right? And believe it or not, even if you're listening to this right now and you think that you're not interesting and people don't want to follow you, trust me, you're interesting and people want to follow you, right? They don't want to follow the houses. They want to follow you. So having that mindset going into it, and I learned that through the process, that's definitely one of the ways. What was your question again, just so I can circle back to it?
Creating interesting content on a platform when it's a visual platform. And
right. So the hyper focus on the personal brand, like who I am, number one. And then also giving a detailed, with every piece of content, you should be pushing your brand forward, right? So if your brand, for instance, I'm going to keep it on myself because that's all I can really speak about, is not your average lender, I need to make sure the messaging behind every piece of content that I put out is why I'm not your average lender, right? So that's number one. Number two is creating a mission. People want to follow a mission. People follow causes. Look at religion, right? Religion, people do crazy things for, right? There's total ends of the, different sides of the coin there, right? Yeah. People do crazy things. People are, follow it to death, literally. Yeah. Now, what is my mission, right? My mission and my mission statement is to remove average from real estate by adding value to real estate professionals and consumers. That's my mission. So at every piece of content, or I try every piece of content, am I trying to accomplish my mission? So now people want to see what ends up happening with you, right? What happens? Where's Eric going to be in a year from now? I want people tuning in like that, like watching my every move, whether they don't want to see me win or whether they want to see me win. Because there's going to be a lot of old friends that say, that like, comment, and all that stuff and say, I'm so proud of you. But they're not. They, it's making them kind of put pressure on themselves. So I think attaching a mission to it is extremely important, and a lot of people overlook that.
About, I guess it was a week, 2 weeks ago, we interviewed Tony.
Yeah.
And Francis from Why Not You Media, and
great guys.
They're great guys, and I know you or he had said, I don't know how long you guys have been working together for, but you guys work together for content, I think, now, don't you?
Correct. Yeah.
How much did he help you, unless you already had it in place, form that identity, I guess you can say, and come up with ideas of how you could put content out?
So Not Your Average Lender existed before I started working with them. The content, I always had somebody making it or I was doing it. But I will say, having a team that focuses on that for you, they don't post for me, they don't write the captions, they don't have control over my account, but just the actual capturing of the content, having a team that does that and focuses on that for you frees up your time. because the main excuse I hear people using for not building a brand or taking social media seriously is I don't have time. It's very time consuming. I've heard it, I've said it, right? I can't post every day, right? And I don't really want to post every day, but that's a whole nother story. But having a system to capture that content where it doesn't completely blow out my schedule, which it easily could if you do it the wrong way, is crucial. I think that's where they really helped kind of maximize my time. Because as a realtor, as a loan officer, we're busy. We're constantly being pulled in 10. And if you're not busy, there's a problem, right? We're constantly being pulled in 20 different directions, right? The last thing I want to focus on is a photo shoot, right? But I know it's necessary to push my brand forward, which will then help me do more of what I'm supposed to be doing, which is closing loans. So they helped me kind of pin that down and make sure that I'm creating content, good content on a, decent frequency.
And it's now just recently over the past couple of months. I mean, it's not just now, for people listening who may not know, it's not just, Instagram content now. You're doing speaking events, and you're doing the big thing now, which you're known for is the brewery events.
Yeah.
I missed the last one. I wanted to go, but so tell me about that. How did you start? I mean, because it's a great idea. So tell me about the brewery. How did you come up with it? What is it for the people who don't know? And going forward, what are you going to do with it?
So this is something I'm super as soon as you mentioned brewery, I started smiling, right? This is like my baby. It's something I'm super passionate about, and I thank you for bringing it up, and hopefully all of you can come to the next one. Being in the industry young, I don't know if you guys ever experienced this, but I don't know. You ever been to a networking event and you sat there for an hour, 2 hours, 3 hours, and you said to yourself, why the hell am I here?
All the time.
This did nothing for my business.
Yep.
It's boring. I don't want to hear this guy talk anymore. Who cares about FHA 203K loans? Like, who cares about title? I don't need to know that stuff, right? And obviously you do need to know about it, and it's good to know about rehab loans, but let's be honest, that's not the most exciting topics, right? So having multiple experiences like that, I said to myself, all right, my mission is to defeat average, right? We need a new networking space. We need a new event for real estate professionals. And I'm going to say the median age at one of these events is like 25, 27 years old. That's super young for a real estate event.
Yeah.
And it makes for a really cool environment. So the whole goal and thought behind brewery. So for the people listening, you don't see the logo in front of you, and I wonder if I can pull it up. But anyway,
if you want, I could superimpose the logo underneath
we'll put one in.
Cool. So yeah, if you see the logo, it makes a lot more sense. But for the people listening, it's brewery. So it's obviously a play on words with like a brewery. It's spelled BREW-RE, and the RE at the end stands for real estate. Okay. Yeah. So it's a real estate networking event that's hosted at breweries, and the idea is to move it from location to location. So our first event was Oyster Bay. We had about, I'm going to say 60 to 80 people show up to our first event with I'm going to say a week of promotion. It was thrown together, and everybody had a really good time. Our second event, we went big and we did the Brooklyn Brewery, right? We got the whole space. They gave us tours of the actual facility. You got to walk behind there and see how the beer is made and stuff like that. And we had over 100 people. I'm going to say 120 was the final count.
I have a friend.
What'd you say?
One of my friends went. He said it was awesome.
Who?
His name's Andy Machado.
Yes. Yes. And yes. So that was really cool. That was really, really cool. And the idea is the tag, if you will, is connect, relax, enjoy, right? And our hashtag is beer and real estate, because that's all we want it to be about. We don't want it to highlight one individual more than the other, right? At the last event, I said, this isn't my event, this is your event. So I although it is building a buzz and I'm becoming known for that, I don't necessarily want me to be the focus of that event. I want it to be for, number one, the people I'm doing business with currently, to show appreciation for them. Because again, my business is 100% referral, and I realize that. And number two, to build new relationships with individuals that are like-minded and want to take their business to the next level. So it's a really cool environment.
Like, how did you, I mean, the second one maybe had a little bit, of experience, but the first one, how did you go like, yeah, I'm going to rent out a brewery space? Like, how did you do that? Did you find a space? Did you just call a bunch of them up and say, hey, I want to do a networking event here. Can we rent the space out? Like, how did you do it?
So my partner knows the owner of the first venue. Okay, so that was like the natural thing to do. It was in somewhat of a centralized location in Oyster Bay. So, all right, give some people from Suffolk a chance to get out. It's not too far west, but also, make the people from out west drive a little north. And it's funny because so he introduced us or made that connection, and we got in contact with the owner and said, we want to rent out the space. All you can drink beer, by the way, at all of our events. It isn't paid. Yeah. What'd you say?
I didn't even know that.
Yeah. So, and people say that they're like, oh, you should have told me it was all you can drink beer. I would have showed up. But it's free admission. I always said, like, if we ever did charge and we ended up being positive, it would donate to a charity. Like, I don't want to make money off this. That's number one, not the goal. It's to create an environment that like I said, to kind of eliminate the need to go to those boring network events, and we're trying to have it quarterly. And also a part of the vision is to have this thing national one day, where there's like a Florida chapter of brewery and a California chapter of brewery. And it's a platform that we want to take national one day.
That's awesome. That's creative. That's something a lot of people are into. I mean, it's leisure and networking at the same time. And
yes.
Are you doing another one before the end of the year, or you're not sure?
Not before the end of the year. So first quarter next year. So I'm trying to, it was a lot of time and energy to pull off this last one, because I was trying to I was going big with it, because it's not cheap to rent out the Brooklyn Brewery for a day and then offer free beer for every guest that attends. So I was trying to make the most out of it. So I'm kind of giving myself a little bit to kind of recuperate. And then I also think that, like, nobody wants to do that every month. Or maybe people do, but those are not the people that I want to do business with. Yeah. That are going to get hammered every weekend. But anyway, yeah.
So talk to me about the past 18 months of interest rates, because we've had a lot of moves, right?
Right.
Interest rates were real low. They started inching them up last year. In January, they were almost at 5% on a 30-year mortgage.
Mm-hmm.
Since then, they've basically fallen through the floor because we saw a lot of volatility in the markets.
Mm-hmm.
So walk me through the past 18 months of your business and what you've seen, and then where you think we're headed the next 6 to 12 months.
So first and foremost, 18 months, still historically low. Yeah. Despite the peaks, like, you mentioned that we were almost in the fives. I'd say we did break into the fives at one point. I'm not going to – maybe in January that was the case. I don't want to pinpoint a month, but that sounds about right. But I'm going to say, yeah, over the past 18 months, there has been a lot of ups and downs. Rates are – one day the news is saying rates are going up. The next day the rates are falling. The next day, rates are at an all-time low. I always tell people to refer to the 10-year bond yield, all right? So the 10-year Treasury note, just like real – and I'm not, like, super into the macroeconomics, if you will, but I need to know how it works, obviously, because on a micro level, it's very important on a day-to-day basis. So the general gist of how I was really taught how interest rates work and how you can kind of figure out where they're going, et cetera, and why they are the way they are, is whenever there's uncertainty in the stock market, big investors will take some of their money out of the stock market and place it into a more safe vehicle called the 10-year bond, or into bonds, let's say. Now, when you have money going into bonds, the bond yield goes down. That's what's going to drive interest rates down. So the bond and the interest rate are pretty much, it's a direct correlation, right? So when the bond yield is high, the interest rates also should be at high. There's other stuff that comes into play, obviously. For instance, let's say China. That was like the big thing that drove rates down this last dip, is that trade deal in China. And I don't know the specifics about it. I really don't follow that stuff, to be honest. I just know how it affects my industry. So there was uncertainty about that trade deal. So now the market's going crazy. The stock market goes into a little dip, and the investors take their money out and put it into bonds. And now we have the bond. I have it pulled up right here at 1.84. All right. To give you an example, in January, the bond was at almost a 3. Actually, in December of last year, it was above 3.
There you go.
So I know it doesn't sound like a big jump. 3% to 1.8, that's only 1.5% or somewhere around that. That's a big, big swing when it comes to bonds. All right. So now just in the past month, I'd say we dipped, right? And then now we're back up again. And now everybody's scared. Oh, refinance business. It was there for a minute and now it's gone. Should I wait to lock? All these questions, that people ask. But the main thing I always like to say is interest rates right now, historically speaking, are still low. They will be, in my opinion, for a good amount of time. The better the economy does, the higher interest rates get, right? What happened during the crash is the Fed was pumping out money dirt cheap, and the banks were able to lend money dirt cheap, right? But the economy can't operate on 0% interest or 1% interest forever. They need to tick up. And that's, again, not that I don't like it. I do find it interesting, but I don't spend a lot of time figuring out the macro stuff. I just know right now rates are good, and I think they'll stay good for a while. But general trend speaking, if I had to say a prediction, they're going to go up.
Okay. You think they're going to go back up to 5 or beyond 5, or you think it's going to stay?
If we don't have a recession, yeah.
Gotcha.
Which is a big if. I mean, people say it's coming. We're due for one. I don't know how that stuff works either, to be honest. I don't brand myself as that expert by any means, right? I'm really good at loans. I don't know what the economy is going to do. Consult your financial advisor on whether you should put money into your 401k or not.
There's people that make millions and millions of dollars trying to predict it, and they get it wrong. So don't worry about it.
Yep, absolutely. And they make money whether the market does well or doesn't. So,
Exactly. So listen, we're coming up on our hour here. So what I wanted to do is I wanted to give you the floor. What do you want to plug? What do you want to talk about? Talk about your business, talk about the brewery thing, and anything you want to get out there for anyone that's going to see this.
Right. Okay. So I would say if you're listening to this right now and you're contemplating on buying a house or selling a house, contact you guys, right? If you're listening to this right now and you're thinking about refinancing or buying a house, contact me. Now, how do you contact me? I'll throw out my cell phone number, 516-265-4244. And also on the other side, so if you're a real estate professional and you're looking for a team to join, contact you guys, because you guys are absolutely killing it, right? If you're a real estate professional and yesterday was Sunday and you couldn't get a hold of your loan officer and you missed out on that house because you couldn't put in the offer quick enough for your buyer, contact me, because that's not going to happen, right? I have a very strong opinion about working weekends. I work weekends. I'm 24 years old. There's no reason not to work a weekend. right? Now's the time.
Yep.
And I'd say if you are looking for like a cool networking space, brewery is definitely a cool thing. And I'll throw my IG handle out there too. Not your average lender.
Yeah.
And
I
on
def-
all platforms.
Awesome.
Yeah, thanks, Eric. That was awesome.
Yeah, it was.
Well, this
Thank
is
you,
the
guys.
Pesce Lanzillotta Team podcast. That was Eric Braun. He's awesome, of Contour Mortgage. Thank you for coming on. With regards to us, if you want to get in touch with us, our number is 888-9711. That's 516-888-9711. You want to send us an email, it's info@pl-team.com. That's info@pl-team.com. Boys, you got anything to say before we cut this off?
Nope.
All right, we are out.